Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, October 6th. We just had non-farm payrolls come in. Let's see if our data is actually going to bring it up. No, it's not going to bring it up, but imagine that there's some data here. We got 3.8% unemployment rate. The employment report, which is also called non-farm payrolls, came in actually double, so over 300,000. But the interesting thing about that data is that, the main data points aren't going to show you. Most of those jobs are either seasonal or part-time. We actually had a drop in full-time roles, which we're going to get into. And so we were talking about the unemployment rates. It went up to 3.8%. Hourly wages are actually lower than expected, 0.2%. So those are two pieces of good news. Then when you kind of think about the non-farm payroll, full-time jobs aren't happening, or they're actually decreasing. So it's not real job growth if you're just picking up a Chipotle job or a McDonald's job, So today, we're going to get into it, but it does look like a bit of a news failure. DXY shot up on the non-farm payrolls and then shot back down, is now, looking for that 105.9 support. And obviously we are getting some relief from equities and crypto. So just the grand scheme of things, if you're thinking about macro news and data, everything dropped on non-farm payrolls up. But when you look at the data, it's actually, kind of good news, because unemployment rate ticked up, wage inflation's down, or even, I should say, and then we're not really creating legitimate jobs that people can rely on long term. It's actually getting a little bit worse than labor market, because people are picking up multiple jobs, part-time jobs, etc. So we're seeing DXY decrease, which is obviously good for risk assets. And with this kind of ugly candle, we may not even survive 105.9. We could, drop below it and start to, really look towards this level here. I don't want to get too ahead of myself, but definitely something to watch out for with that kind of data, especially if we get positive leaning inflation data towards the middle and end of the month. So just something to consider. So let's look at equities. Obviously, again, with the news failure, a non-farm payrolls 8 o'clock, shot right back up. We're now above where we closed yesterday. So this is the, this dotted line right here is the yesterday's close. So, I thought this was interesting. I think it's better to even look at it on the daily. And for some reason, these lines aren't sitting here. So let's just go ahead and imagine, there's some lines here. Let's just make them happen. So what I'm thinking is, we're already above the 1-day estimated trending moving average. So this kind of like a giant news failure. We got a bunch of wicks underneath. We're now breaking back above. And as long as we close above, we could close all the way up here, but this does look very good to me right now. Does look like we can start to target 43.30. And then obviously if you can get above 43.30, which is both, right around the low from August, as well as this, it's not the June low, but a very significant low, if you will. And so if we can get above that, then we can start to talk about 43.76, and then, maybe even higher. There's a lot of room to clear up here, because there's a lot of liquidity. So, things do look really good right now for risk on. Always be careful diving into something if you're just listening to me on the show. But I really do like the look of things right now, provided we close above the 1-day estimated 200 moving average. So things are looking up for equities, but we have, closed above and then gotten shot right back down. So, I wouldn't be putting your whole stack in right now, but right now things are looking positive for the equities market, and should continue that way, considering the way that unemployment looks. The only thing that would really pull us back is some really negative Fed speak or a bad inflation print, and those look unlikely, but is always something to watch out for. So let's move over to Bitcoin. So this I thought was interesting. We called this out to the TTC community pretty much immediately after it happened. Another reason why you should be in the TTC community, because obviously you missed out on the trade. But we swept the Monday low. And so after we swept the Monday low, what happened? Well, we ran right back up to pretty much the middle of the range. And so now we're above that significant low from Sunday, October 1st. We do have to watch out here, because multiple times we were cut back down, but maybe third time's the charm. So as long as we can stay above this level, we could shoot back up, but probably to assume that maybe we retest this level. But as long as we can stay up here, we'll move up here. And, we definitely want to be careful of this Thursday high. But this 28.16 level coincides with the grayscale high. So this is also a very significant level, and that's why we have it lined out. So you really want to break above this level, but I think it's a good target for longs considering we swept the Monday low. We're right here, and we could, I think this is reasonable as long as equities close well today. I think it's reasonable to assume we could just pull a full Monday range sweep the low, run up to sweep the high. How long that takes? Does it take till Sunday? Sure, it could. And that's why we want to play things level to level. No reason to just start diving into things. Maybe you want to see all this test, but could always jump up. So we're currently in longs. We saw that sweep. We got in, right around 27.5, 27.6, buying it up. And now we have a good break. So things look very positive in the interim. But the red herring that you need to watch out for is we need to close above 27.8. There's no doubt about that. And then if you want to see the high from Monday, then you need to close above 28.1, which is the grayscale candle. So this whole little area right here is going to prove to be very tricky. But as long as we can break above it, you will definitely see a laser up to the Monday high. So very much something to consider over the weekend. Now, ETH, before I do this, ETH BTC, I thought this was very interesting. Let's wait for everything to load. Obviously, it doesn't look amazing right now, but if we look at the 12-hour, and this is actually also evident on the 4-hour, and let's hyper focus on this. Mike, I see your comments. I can't do anything about my internet. You can hit AT&T up if that is an issue on your end. I have to deal with what I have to deal with, and AT&T is not going to come out and redo fiber optic cables specifically for me, even though I have the 500 gigabyte or 500 megs, whatever it is. So aside from comments from one of our viewers, the 12-hour on ETH is showing bullish divergence. So bull, RSI is moving up, price is moving down. This should, in a perfect world, move up, break above this low right here, and then start to target this low. So obviously we need to break above this low from the 21st of September, but it does look like it is a strong possibility. So your trigger for the long, you can dive in here and obviously set your stop at the low down here. But if you want, a really good trigger above 0.059, or you can just long it here. But I think this does look, positive, at least in the short term, for reversal. Obviously, we're looking at the 12 hours, so this could take all the way through the weekend and into next week to really, form. But I do think that, you can start targeting this low and then this low up here, just based on the bullish divergence. And of course, if the market moves up and ETH doesn't move up as much as Bitcoin, it is what it is. But I think, if you wanted to just play this to play it safe, I think there is a play here. Or, ETH, may just move a little bit stronger than Bitcoin. And looking at this 12-hour, very strong 12-hour. I do kind of worry about this wick down here, but that's something we could clean up, a long time down the road. So let's move back to the 1 hour. And let's look at what we're talking about here. So the key level for the TTC community this morning, which we already broke, was 1636. So check box in for the longs. And then, first target, always, 1 hour estimated 200 moving average. Next target would be weekly VWAP, which was kind of the main target. I think we said 1660. So if we can get above 1660, then we will ride up to 1695. If we break above 1695, we'll ride up to 1750. So a lot of time and movement to still be had. But right now, we're breaking above pretty much all the downtrends that ETH was on. I will say we kind of have this one to contend with, but that'll be something we worry about when we get up to 1660. So right now, ETH does look good. I think, obviously in the immediate term, Bitcoin is clearly stronger, but I think ETH BTC is going to make a play once we wash out some of this initial volatility. So we obviously tagged the previous daily close. We shot back up. Now we've got some long plays kicking, and then above 1660 is when things get really fun, and then above 1695 is where things get insanely fun. So I think your core targets, just easiest way to do it, line it out this high from the September 30th, line out this high from October 1st. And then as long as we can, get really above this level right here, then that, obviously around the 1660, that will form bullish market structure. And let's get rid of some of these lines so we don't confuse ourselves. But as you can see, low, 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 lower low. And then, now we've got, that's our lower low. I mean, I'm sorry, these are all lower highs. So now we've got we formed a lower low here. Now we have a higher low, right? And so if we can get up here, then we can form a higher high. And then that, maybe then we form a lower low right here or higher low right here. And then that'll be kind of what really helps us shoot up. So we just want to change, the best thing to look at is just market structure. Can we form bullish market structure? And if we can, it's a really good trigger for a long, or double down on your longs if you're already long like we are. So yeah, I don't think there's too much to dig into for what we're seeing right now. I think where I am wrong, I think, if we get cut down here and we form an ugly hourly wick back underneath 1636, I'm wrong. If we, shoot up to 1660 and then immediately drop immediately drop back down to 1636, I could be wrong. But the best way to be right is to see bullish market structure form. So if we can get a bit of a higher high and then a higher low, something like that, then things will be moving in a much more positive direction. So right now we are bullish. We are in longs. Things do look positive. And then for Bitcoin, obviously, if we close back beneath 27.8, that is probably get out of longs for me. And that's probably the only thing that'll get me out of longs, because we're in from like 20. I think we started buying at 27.5, averaged up to 27.6. And then, if we close back underneath 27.8, we'll cut for a small win, and walk away. But right now, especially with the news failure event, with DXY, dropping like a rock, things are looking positive right now. And definitely, again, we want to see this daily close above 42.73, 42.75. If that is the case, then we don't have a full trend shift yet. We don't have a higher high yet, but that's why we want to get above the 43.30 level. We can form a higher high and a higher low, and then market structure shifts and maybe can send us up to, some of these levels up here. So good luck. Happy trading. See everybody next week.